If you're looking for the next great tech stock, look no further than your local alcohol company.
Long Island iced tea blockchain has nothing on quantum computing.
And another one recently that you got to check out and use your forensic analysis and do your homework and be careful of these hot stocks, these hyped up stocks. We got one that you got to stay as far away from as you can. If you own it in your portfolio, you better dump it today.
Today on Altimetry Authority.
Let's talk earnings and favorite pastimes.
So let me just say,
Taking on
forget the word
liquidity
by
of Wall Street.
It's
It's
why do they
2.5
do it?
x
Because their compensation goes up.
Wall Street's wrong again.
So back 5, 6, 7, 8 years ago, when crypto and blockchain was the word and the buzzword of the day, the original Long Island iced tea company said, yeah, it's good getting people drunk, but we've got something better in mind. And they literally changed their name from Long Island iced tea to Long Blockchain. And the stock went soaring by more than 400%. It just got hyped up, and people thought, I don't think people even realized that it was a Long Island iced tea, as in the drink company. Stock went up like 400%. It was, people were talking about it. A lot of people didn't even realize what they were buying. If you can see here back, the stock jumped in 2021 in some crazy levels, LTEA on the NASDAQ. And then people started saying, is it really the best thing for blockchain to come from an alcoholic, albeit popular alcoholic drink? And Eric Watson, who's the controlling shareholder of it, we started seeing some things come about like, wait a second, has he done something in the past? He built Hanover Group, which had collapsed over years and caused significant losses for small investors, and a bunch of funny financial statement issues, like maybe there's some related party issues and whatever else. Another company who's associated with Cullen Investments, this is all prior to Long Island Iced Tea, and he had these New Zealand companies that just went into liquidation. He also was part of the New Zealand Warriors, and he sold his half to another billionaire, Owen Glenn, and that went into a massive legal dispute, which eventually led to Watson going to 4 months of prison for contempt of court. But of course, he should be the guy to take an iced tea company and turn it into a crypto blockchain monster. Of course, it didn't work out. The stock took a giant hit, and the crypto craze with Long Blockchain has gone, and it eventually got delisted by the SEC a few years later. That, wait a second. So when we look for these kinds of companies, because we got another one for you, right? We look at these forensic red flags. And it's not as mechanical, mathematical as you think. A lot of people think, oh, I'm going to start looking at these numbers or whatever. Some of these companies don't have revenue, right? Let alone earnings. So you don't have any fancy numbers to look at to even do some cool calculations or regression. What we find is things like just looking who the auditor is. Who did they choose for an auditor? Or are there financial statement mismatches or other things? Rob, did you see any other issues at the time with Long Island Iced Tea that popped up in our forensic red flags?
Yeah, I mean, so, and everybody, to Joel's point, these are things where what you're doing, the reason why we have these red flags, before I get into details, is because what you're always looking for is you're looking for intent, right? I mean, this is the whole entire idea of people who focus on the accounting for trying to find fraud. You're totally missing the point, because like you can have weird things happen with accounting, but if you find intent, and that's what these financial red flags are. And so for this, some of the things that jumped out is you saw this pattern of behavior from the management team, as Joel highlighted. You also saw a flurry of press releases happening where nothing real was happening for the business. It was just about the name change, or that they might do this or they might do that. But the other thing that was really funny that you saw, and this is something that you can always pay attention to, is do you see any weird trading happening right before something big happens? Management trying to profit from the news that they know or something else. And this is what happened with Long Island Iced Tea. They actually leaked out the information to some close friendlies about the fact that they were going to do the name change. So those people bought in before the stock rocketed higher, right, Joel? And they all made minutes. And it was like, those are the kind of things that you're looking for. You're looking for intent that then tells you, okay, this is a reason why to avoid it. And that's what we saw with Long Island Iced Tea. And Joel, to your point, as we'll get in everybody, that is also what we're seeing for this company that Joel's going to talk to you about in a second.
And because for some reason people think alcohol companies are great for making new technology, I'm not joking, right? We have the Innovation Beverage Group. And the Innovation Beverage Group, which is Drummer Boy Alcohol, said, you know what? Someone said, I'm going to buy that company, use it as a shell, and then turn it into Quantum Computing Inc., I suppose because they had the domain name Quantum Computing Inc. that gives them the ability to do it. And so they created out of innovation. This is right now. They did 200-for-1 reverse stock split, changed the name, all got approved because you're allowed to do these kinds of things. It's just fishy, right? And then we started to know some things. This is right now, by the way. This stock is a 2 to 3 billion market cap stock right now. It's way up in the last just 10 months, 11 months. And we think this looks like another fishy concern like Long Island iced tea. So anyway, here's Quantum Computing. Remember, this is the innovative beverage company. But anyway, Quantum Computing Inc. And Rob Lasuski is CEO of QUBT, has been on the news. And I mean, he looks like a businessman. He looks like he has experience and he's been on TV and everything else. But let's see if he's any past issues. He was at Implant Sciences, and as president and CEO, he brought that company to bankruptcy. And by the way, when to bankruptcy, it wasn't just all like, hey, I couldn't make it work. There are also alleged fraud in financial reporting, specific financial reporting in the lawsuit. And then again, with quantum computing, there was something involved in an acquisition and other executives for improper debt assumptions and self-dealing. That was in 2022. And yet, we're looking at a stock that is now almost a $3 billion name. And then multiple shareholder lawsuits that have come out with this company, meaning more of the same of what we're seeing. One of the bigger issues, though, as this stock has been way up, because this is currently, man, I would not touch this stock with a 10-foot pole. Nobody should. But anyway, it's up in all this quantum computing hype because, wow, quantum computing is exciting. And if you have the domain name, you must be really good at it. But when you look at their filings, one of the things we look at is their auditor. And their auditor, they specifically chose an auditor, let me zoom in, as B.F. Borgers. Has anyone ever heard of B.F. Borgers? This is the great, it's like Deloitte, EY, KPMG, and B.F. Borgers. So anyway, B.F. Borgers, their public accountants, by the way, audited this gigantic firm, right, this billion-dollar firm, for the low sum of $130,000 and $119,000. I'm going to tell you, I've been an auditor in the past. I don't know what company you could possibly audit for that small amount of money, unless you're just not doing an audit, which is exactly what they found. And the SEC said, Borgers, you're so bad at doing audits in more than 1,500 SEC filings that you've done that we're not going to allow you to be an auditor anymore. So when you look at Lasuski and you say, shouldn't someone specifically know whether or not they're hiring a good audit firm, or do they specifically hire bad audit firms? Well, he went and hired another audit firm, and maybe not as bad as Borgers, but let's see. He replaced them with BPM LLP. Anyone heard of BPM LLP? I mean, they're not the big four. They're not in the top 10. I'd argue they're not in the top 25 of accounting firms in the United States. But one thing they are famous for is that when you look at audit deficiencies, right, the PCAOB said, we've sanctioned 5 firms for violating PCAOB rules. This is recent. And at the top of their 5-company list was BPM LLP. So apparently Lasuski and this firm, right, the new quantum computing, has a habit of specifically choosing accounting firms that may not be in the, I don't know, capability of doing audits for the benefit of the clients. Anyway, it's funny because when you look at audit deficiencies, every firm has audit deficiencies, somewhere between 14%, or they find something wrong with an audit. E&Y's had a particularly bad couple of years with a little bit more. But in BPM's case, their audit deficiency rate, actually last year it was in the inspection report, the last year was 100%. 100%. But if you go back over the last 6, 7, 8, 10 years, they really have something like more than 2 out of 3 audits are deficient. So some reason this firm, Quantum Computing, is particularly choosing auditors for their financials who don't fully audit. And the reason we bring this up is because when they don't fully audit, there's certain things that are tough to find. I'm not saying the company doesn't have any revenue anyway, really, to speak of. It's like a couple $100,000. But they're not good at finding things like related parties. They're not good at finding the other things because they don't have the time, and I guess they don't have the money to do it, or they're not charging enough to do it. And that's one of those issues. When you start looking at these various forensic red flags, you find that, one, they're particularly picking a not great auditor, but 2, there are some suspicious related party transactions having to do with the revenue. There are other, I would say, irrelevant or sham kind of endorsements. Rob, you got a couple of cool things that pop up in the list when we look at quantum computing?
Oh yeah, exactly. And right to your point, and everybody's comes back to the idea of intent, right? To Joel, as Joel said, right? Why does a company not just employ one, but 2 really bad auditors, unless there might be a reason why, right? So, but for context, right? Once what's Robert left, right, as CEO, Joel, when he left, I think it was early 2024. This is the best thing. This next guy comes in who had been part of the things that Robert had done before. Will McGann came in, and Will McGann stuck around for a year before Will McGann retired right in the midst of all of these lawsuits throwing up because they were just hyper promotional in terms of the promises they were making about all these different things that quantum computing was going to do. They were talking about how they were working on NASA's next secret weapon. Then they had another press release that was about their quantum foundries. Then they were talking about how, and this is important, everybody, how they were helping make an emotionally intelligent AI. And by the way, everybody, with that right there, that last one is a really, really good clue when you're looking for companies that are just, for lack of a better word, shady. Because when a company just, their press releases and their next big thing that they're working on just happens to be at the next really, really popular thing, that might be a sign that they're just chasing the mania. But there was a reason why they're pushing out all these press releases, and McGann was doing this, because all those press releases, if you looked at Joel's stock price, are why the stock price shot up to over $20 a share, which, by the way, was when the management team unloaded 200,000 shares worth of the stock. After unloading their 200,000 shares, after that, then they raised another $200 billion of capital from outside investors at lower prices so they could refill the bucket to be able to spend more money on whatever it is that they wanted to do. And so you look at all this and you see these pattern of behavior that looks very, very like what's going on. And now you've got a new CEO. The new CEO is their former head of quantum. And Joel, you have a solid observation about his last name and why that might have been why they chose him. But this guy, by the way, everybody, isn't like saying, oh, management has changed, it's okay. He literally has been with the company since 2022. So he's been through all of these shady things that are going on and supporting it. So you can't trust him either. And you look at all of this pattern of behavior. And then Joel, one, I want you, Joel, to tell everybody his name. And two, you should also talk about that friendly word, related party transactions. Sorry, 3 words, because that's really important too, right? I mean, literally their only revenue, that $100,000 of revenue, Joel, is a round trip of them loaning money to somebody who then went to give them buy their stuff with the option that quantum machines, everybody, that quantum computing could actually buy the company afterwards anyways. It's the worst related party transaction you could ever see. But sorry, Joel.
Yeah.
If I know that you want to jump more into that stuff though.
If you want hype, right, get the domain name quantumcomputing.inc.com, right? Rename the company from a beverage company, an alcohol company, into what have you, and then bring in a CEO whose last name happens to be Huang, Huang, same as Jensen Huang at NVIDIA. I don't think a lot of investors are paying attention that there's no relation between these two people. This is Yuping Wang versus Jensen Huang. Also, the fact that the last name Wang is one of the top 10 last names on the planet Earth. On the planet. In fact, fully 1 out of every 200 people in the world has the last name of Wang, of U-H-A-N-G, but H-U-A-N-G. Anyway, despite that, that seems like what the company's trying to do is put in whatever kind of hype they can get from whatever to make it look like this is going to be another amazing company, when in fact the red flags are everywhere. You should never go near it. I'd put it at the top of a do not buy list. By the way, in past, when we've built do not buy lists, we did one many, many years ago, and that do not buy list had 57 companies on it. Within 6 months of any company getting added to that do not buy list, the stocks fell by about 50%. 50% stocks would fall. That's our track record anyway. We've updated this even in the last couple of years. Again, within 3 to 6 months of us putting something on our do not buy list, we see a stock fall by 50 or more percent. Over time, we'll see many of our stocks fall by, fully, collapse to being delisted. At the top of our do not buy list, because of all the fishy indicators, would be Quantum Computing Inc., QUBT. Stay away from it.
And so everybody, if there's a company that you want us to kick the tires on like this, or you actually like this kind of conversation and want us to cover more of these, which, by the way, we currently maintain a current do not buy list that has over 57 companies on it. And Joel, is very, very similar to the returns that you just went through there. Everybody, we've got multiple companies that are down 99 or 100%. We got a bunch of companies that are down 50 to 75%, because this is the kind of stuff that we're looking for. We're looking for these companies that it might be a $3 billion company that you might be, I need to buy a quantum computing company, you Google it. And the reason why we do the do not buy list, so we let you know, hey, this one, not the one to go for. So if you enjoy this, drop something in the comments if you want us to look at a company, you want to debate us on quantum or anything else, and come back for next episode. Hit the like and subscribe button. That is this episode of Altimetry Authority. Thanks, everybody.